I'm Tom Jones with T6 Business Builders. You're not building wealth by just having more revenue. You're building wealth by taking more money home and putting cash in your pocket, doing all the planning, tax planning, all of that so that you can build that wealth instead of just keeping busy. And remember, what you can measure, you can manage. So you'll get clarity on where you stand, and you'll have the confidence to make the changes that you need to put more money in your pocket, make your business run better, make your business worth more, and to give you peace of mind. What if you knew exactly how much profit you're really making, or how much cash you really have ready for tough times, or if your pay matches your hours? By tracking them, you'll get more freedom, bigger profits, less burnout, more family time. We're going to get on to number one, your true profit margin. This is your real profit after all cost. Have you ever felt like you're working really hard, but not seeing any results? You feel like you just, the old hamster wheel, you're just running, not getting anywhere. That's because you're not measuring this. Knowing this creates clarity on where the money goes so you can price better, not waste, and keep more of what you earn, leading to bigger take-home pay and less stress level, less worries. How does not knowing this affect your daily decisions and your stress levels? Think about the missed opportunities and the extra hours you're working just to spin on that hamster wheel instead of measuring what you got. Imagine if you could boost this easily. How would that impact your business growth? How would you like to have more cash? You've always wanted to expand to this thing because you know it will make you more money, and you can plan for it, but it feels like you're just always spending, not doing them. So let's just get into a few examples here. Say you made 500,000 in revenue last year. Sounds great, right? But profit, many people can't tell me that. They just guess. Oh, I think I made 10,000. I made 20,000. I made 50,000. But it's real easy. And let me show you. We're going to get on the whiteboard here. So we're using that $500,000 revenue as an example. So you got 500 revenue. Let's say you got 250K in material cost. That brings you down to 250 before operating expenses. Now, let's say you have 225,000 operating expenses, rent, salaries, your pay, whatever else. That leaves you $25,000 as your profit. Remember this, and this is before income taxes. Remember that. That gives you a 5% margin. Do you really want to work 60 hours a week for a 5% margin? Is that something you really want to look for? Now, as an example, I had a client that was doing 800K in revenue. Sounds like a good number, right? Problem is they were only making 3%. And again, remember, this is before taxes. So they were making $24,000 before taxes. Now let's just take a normal tax rate of 20%. They're going to lose another $5,000 to taxes. So they're making $19,000 a year profit from the company. Oh, yes, you may be taking wages out, but do you really want to work for that amount of money? Your business should be creating wealth for you, not struggles, not stress. What we did is we worked on the numbers, kind of coming back to everything else. I mean, and we could go through the 6 pillars. Big thing is we worked on systems and we really analyzed where he was spending the cash. We got that number up to 15%. That was $96,000 more in his pocket without changing revenues, just by analyzing what he's doing. For you, this means growing profitability under pillar 2. What could you do with $96,000 more in your pocket? Imagine what you could do for the family. You could take a nice vacation. You could do improvements that you wanted to have done at home for a long time. Any of that. And not only that, you could do that growth factor that I talked about, building your business 10 times within 3 years. Imagine if you had that $96,000 and then you can start, now you know how to analyze your revenue so that you can make your company grow even more. Wouldn't you like to do that? Item number 2, what is your actual cash position? I can ask a client that, they're going to say, I got $25,000 in the bank. And then I'll say, yes, you do, but what do you have coming up in the next week? Do you have payroll? Do you have rent? Do you have those fixed costs that all of a sudden your $25,000 may go down to $5,000? So what I'm talking about when I talk about actual cash position, I'm saying, what is your actual cash position right now minus bills due in the next 7 to 14 days? I've seen it over and over and over again. Many books will show profit, but the bank account is empty. By tracking your cash position, it's going to create that safety net for you. It's going to create that safety saying, I know I have 40 to 50 days of cash on hand, even after paying the stuff the next few weeks. Again, profit on paper does not pay the bills. Cash does. And that's why under pillar 1 with the profit first method, we split those into different accounts so that you don't spend it all the time. So let me show you how this cash position works as well. We're going to go back to the whiteboard here. Okay, clear up a little here. So again, let's just say you got $50,000 in the bank. It's beginning of the month. You've got payroll. Let's say payroll is $20,000. You got rent. Let's just say it's $5,000. And you've got all your loan payments for your equipment and everything else you do. And let's just say that's another $7,000. So you got $32,000 here. So that leaves you $18,000. Still a pretty good number, but let's analyze that down a little bit farther. You look at last year's operating expenses. Let's just say you're doing that $800,000 for that client. So let's just say you've got $600,000 of operating expenses. Divide that by 365. So how much is that per day? Of course, I didn't use nice numbers. Let's just say, so you got 600K of operating expenses divided by 365. You're roughly at, let's just say $300 a day for operating expenses. So you would take this $18,000 and you would divide it by the 300, and that would give you roughly 60 days of cash on hand. Now that's good. That's probably a good number. You should have 60 to 90 days cash on hand. But what happens is a lot of people, they're writing such thin margins. This number ends up being like $1,000 a day, and they've got $18,000 after these fixed expenses. So that's kind of what you're trying to target. You look at last year's operating expenses. How much per day am I spending? How much cash on hand do I have after I pay the bills that have to be paid in the next 7 to 14 days? Like I said, you're trying to get to that 60 or 90 days. If low, build it up day by day. Just kind of look at it, use that profit first method, allocate out the accounts. If you build it up day by day, let's say you're only at 10 days. You work on it for the next month, you're up to 15. You just keep building on that. It reduces stress and it builds your confidence. Not only does it build your confidence that you got the cash on hand, but you're actually analyzing your cash to make sure you're spending it in the right spots. One of my clients, they had 20K in cash on hand. That sounds great, doesn't it? But they had 15 in the next 10 days, and they looked at it, they had $5,000, and they were running at $1,000 a day. So they had $5 days of cash on hand. We did the same methodology, worked on his systems, worked on his cash, analyzed where he was spending money, and we got that up to 75 days. It took a while. Granted, this stuff doesn't change overnight, but if you start working on it gradually, it changes day by day by day. Now he invests and sleeps easy. For you, that means that no feast or famine. You got steady cash for family time and for your team growth for the company, with less worry because you've got that cushion. Who's ready to check their cash position? Let me know in the comments. I can help you. I can give you that. Number 3, real owner compensation. This is what you pay yourself per hour. Owners often skip this because they just take what's left. Knowing it creates clarity if your work pays off so you can adjust for fair pay. You're the owner. You are working in the company. You need to take fair pay for what you're doing. This leads to less burnout because you're actually taking money out of the company, not waiting for it. Gives you more time for what you love and the wealth to secure your future. This isn't to beat yourself up. It's the truth so that you can fix it. This is the whole thing. We're trying to get you that awareness so that you can manage it and measure it, manage it, and fix it. Are you underpaying yourself despite long hours? I would say that's probably 80% of the owners that I see. How does that affect your motivation or your family time? If you got to the point where you were taking fair pay and the company was profitable and the company was to have the 75 days cash in hand, what would that mean for your life? What would that mean for your life? What would that mean for your family time, vacation time, mental, physical, all of that? So how do you figure that out? You take the total pay that you took out of the company and divide it by the hours worked. Let's give another example. One client, he took out $120,000. Sounds like good pay, doesn't it? This was with wages and distributions that he took out of it. But here's the thing. He was working 70 hours a week. So what does that mean? He's working for only $33 an hour. As an owner of a company, does that sound good? I mean, you've probably got people that you're paying more than $33. So what do? You start delegating down using systems. We started delegating down, building those systems. We cut his time down to $45 an hour, and we actually raised his income to $150. Now we have more family time because that's 25 hours less a week. You think about that, that's 3 hours a day that he was able to spend more at home. For you, now you're getting paid for what you're worth under pill of 5, gives you more freedom for your life and real growth. And that's what people like to do. They like to see if you ever want to sell your company, that's what you knew. These numbers, again, show you where you are versus where you want to be. When you start working on these numbers, you can start working on where you want to be instead of where you are. Again, it comes back to what you can measure, you can manage, and then you can fix it. They give you clarity. They give you confidence. And they're actually simple steps to get you more profit, more cash flow, a fair pay to you. My job is to make them simple so you can leave and analyze and get the results you need so that you can grow your business 10 times in 3 years. Imagine if you got to that point where you're making nice money and you're still growing the business so you can make even more money, work less, build that business so that instead of having to sell it, you get to decide when you sell it and at what price, and it does what it does for you now. So what do you do now? Take 15 minutes every week. You can manage it after you see the results. That's going to put more money in your hands right away. Like you said, it's not going to be overnight just great, but you do it week by week by week. Within a month or even 2 months, you're going to see that cash flow build up. You're going to see fair payback to you. You're going to see less time that you work in the business. We do a 30-minute call together that's free, and I go over the report with you. That's it. That's the 3 numbers. 2 simple steps you can do to improve your business within a week. Again, you can't measure what you don't measure. These numbers will help you fix issues for more money, less worry, and true freedom, making you feel supported and equipped for real results. Also, if you know of anybody else that could help out, let them know. Send them to this live feed so they can benefit from it too. Share this with them. Let's talk about the top value service. I call it top value service for top owner priority. It's for business owners who want proactive. And what I mean by proactive, you can take control of what happens to your business and not reactive, which is where a lot of businesses are. They send their stuff to their accountant, their tax preparer, their business consultant after it's already happened and you can't change anything. With top, you get priority access to me and my team, quick responses and proactive advice and no waiting around. We only take on clients that we can fully support this way, so you get the attention you deserve. For you, that means less frustration, more confidence, and real growth in your business. If top sounds right, book that call. And again, we only take enough clients that we can service to give that type priority service. The reason we limit clients is because we still have to take care of our other clients too, the reactive clients, but the proactive clients get priority.